Hello again, everybody. Thanks for joining us. This week, what I want to do is to take a look at how we can identify the bigger technical triggers and try and take advantage and continue to take advantage of longer term bullish or bearish movements. And the way that I'm going to do this is to look at a recent example of a market that has trended aggressively for a prolonged period of time, being dollar yen. Now, obviously, there is a certain amount of hindsight behind this activity in this latest example, but if you follow the criteria that we set, you will see these types of signals and types of development occurring again and again that we can use within formations and to establish the longer term risks within the market. Okay, so let's take a look at the daily chart of dollar yen back in early 2021. Now, this is a daily chart. It highlights the initial stage of the upside move. And importantly, the technical signals that we were seeing around this point were highlighting the risks of an improving technical backdrop after what was a very significant and prolonged downtrend within price action. Now, the important point to stress is that every time we start to see a change in directional risk, it will always be reflected first within the shorter term chart. So in this example, we're looking at the daily. We'll then move out to the weekly and to the monthly perspective to see how these positive themes filtered through, if you like, to the longer term perspective and gave us much more confidence within the overall directional risk and the sustainability of what appeared to be a developing bullish trend. Okay, so within the daily chart, the first signal came even while we were still below this downtrend, and that was the break above the last recovery failure high. So in other words, this was the risk that we were starting to see something change within the structure that had finally been able to break and close above the last point that the market had failed, sold off and made new correction lows. So the rally that broke above this previous high was the first potential shift in directional risk. The second was a weaker test of the previous low. So in other words, it's where the market runs into fresh selling pressure, turns lower, sells off and retraces the original move, but finds support above the previous correction low. Or in other words, what we look to establish is a higher low within what had previously been a bearish pattern of consistently lower highs and lower lows. So this activity and the fact that we then went to break this downtrend pattern was an indication that sentiment was beginning to change within price activity, and that perhaps after what has been a very aggressive and prolonged bearish trend, that something was beginning to change within the overall structure. Now, this in itself may well be an initial signal to trade, to look to play to the long side. But what we would like to see and what we prefer to see within technical analysis is the development of these positive themes filtering through to the longer term perspective. So if we now look at the weekly chart, and you'll notice that this within the red box is the area that we were looking at previously within the daily price action on the last slide. So we've expanded the outlook and made it much longer term perspective. So what do we need to see to filter through the positive themes to the longer term risks and highlight the potential for a more sustained and significant move to the upside? Well, clearly we need to see more positive price action beginning to develop, price strength. We need to see weekly closes above the next important resistance level, and we've drawn the downtrend that dates back to mid-2015 as being a further positive break. So we've gone initially from this more bullish sentiment beginning within the daily to then filter through to the weekly perspective with the break of an even longer term downtrend. So in other words, what we're starting to see is the initial positive signals within the daily perspective beginning to filter through and develop within the weekly structure and highlight the risk of a more sustained and prolonged bullish move back to the upside. Now, just to add significance to this type of signal, we're now going to take a look at the monthly chart, because again, we need to see these positive themes. If this is going to continue to develop into an outright positive and bullish backdrop, we need to see also the monthly long-term perspective turning bullish. So we then look at the monthly chart, and then this is the area that we were looking at recently within the weekly perspective on the last slide. And so again, the evidence would be of a more sustained move higher if we start to break above longer term resistance levels. And this is the downtrend that dated back to 1990 within dollar yen. So the fact that we started to see the bullish daily themes being initial retest of a previous low, followed by a break of the last failure high, and then the downtrend. Then the weekly perspective developing into more positive themes with the break of that downtrend. And then, as we can see, no significant reversals developing within price action. And then the monthly price action beginning to break its downtrend resistance. So in other words, we're seeing confirmation, a backing up of these positive themes across a longer term perspective, and a much broader based advance is in place as the potential. Now, we've looked at daily, weekly, and monthly. It may well be that you're looking at other time frames that are much shorter term than this. You may look at an hourly chart, a 4-hourly chart, and a daily chart, but exactly the same theories remain. So in other words, we need to see the initial short-term view highlighting the potential change, and then that filtering through to the longer-term perspectives, whatever those time frames are. So going back to the example of dollar yen and the longer-term bullish theme, we've seen the break of this significant long-term monthly downtrend developing and extending the positive themes. We've seen an acceleration higher, a large monthly candle reflecting that positive sentiment. So if we now look at the move behind those successful upside breaks, this is the weekly chart. And if we add the Bollinger Band onto this weekly chart and the latest upside move, we'll see that importantly, the weekly perspective, or in this case of the 3 time frames that we're looking at, the medium-term perspective, never once turned bearish. Each time the support was found at the rising Bollinger mid-average, from which fresh upside developed, and we started to see new highs and positive sentiment reflected by candles and the widening of Bollinger Bands, and further confirmation of the bullish themes consistently developing. So at no point did we see any reason for the weekly perspective to turn negative while it was above this rising Bollinger Band mid-average. And that's important because when we look at the daily perspective for the same period, alongside Bollinger Bands, you can see that more corrective themes do develop when we break below that rising mid-average on a daily Bollinger Band to suggest the risks of a more extended consolidation. However, if we play this alongside the weekly perspective, and the fact that we didn't break below that longer term weekly Bollinger Band and moving average suggested that the daily activity would still be limited and that we would then look for upside resumption. So it may well be that we would have closed long positions as we broke below the mid-average, looking for correction and a consolidation to develop. But because the weekly structure never changed the longer-term bullish themes, we held above that Bollinger mid-average, we would always be looking for fresh triggers back to the upside. And that would likely come, as in this case, where the market then started to re-establish itself back above the Bollinger mid-average, having traded lower, the market then rallying with positive themes and breaking back above the mid-average, is a signal to resume that longer term weekly perspective and positive themes within the market. So while we did see corrective moves, because the weekly picture remained positive, we were still fairly confident that that longer term bullish theme would remain, and that whenever we started to see breaks back above the mid-average on the daily perspective, that would likely resume the longer-term positive themes and extend what is still a bullish trending condition. Most recently, we've seen the intervention within dollar yen, and that has actually tested again the daily mid-average of Bollinger Bands, but each time we've held on a closing basis. So even though we have seen intervention within the market and a sharp sell-off, the positive themes are still very much in place. And while we're above this mid-average on a daily basis, and from a longer-term perspective, above the weekly mid-average, then the risks and the technical perception is that we're still within this longer-term bullish trending condition. So by using a combination of the time frames, using indicators to confirm the trending condition of the market over the various time frames, and we may see short-term corrections developing within the daily perspective, as we did within dollar yen, as long as the weekly view is still positive, then the risk is that the technical backdrop from a longer-term perspective and that the bigger technical triggers are likely to continue to be to the upside, an extension of positive themes.